Something is breaking inside the financial system, and this time it's not a fringe theory or a doomsday warning. It's playing out in real time on the global stage. The US Treasury Market, once considered the bedrock of global stability, is showing signs of severe stress, and the consequences could be far more catastrophic than most people realize. In just the last few weeks, a wave of forced Treasury liquidations has rippled through key banking sectors. Financial institutions that once relied on Treasury bonds as safe liquid assets are now being squeezed by massive drawdowns and unpredictable volatility. At the heart of this chaos is one simple truth. Trust in the U.S. government's ability to manage its debt is rapidly deteriorating. With the U.S. national debt now over $36 trillion, even a modest increase in interest rates sends shockwaves through the bond market. Foreign demand is weakening. The Federal Reserve is no longer buying treasuries the way it used to, and banks that were once flush with excess reserves are now unloading their holdings to meet liquidity requirements. This isn't speculation. It's happening now. The most alarming part, this breakdown in the Treasury market isn't just a local issue. It's a systemic threat to the entire global economy. The U.S. dollar, and by extension the U.S. bond market, has long served as the foundation of international finance. When that foundation begins to crack, everything built on top of it, stocks, banks, pensions, currencies, starts to wobble. Institutional investors know this. That's why they're quietly rotating out of traditional bonds and into alternatives that can survive a monetary reset. That includes hard assets like gold, real estate, and increasingly, digital assets built on blockchain rails. What used to be considered speculative is now becoming strategic. Platforms like Ripple's XRP Ledger, Stellar's network, and other blockchain settlement systems are being adopted at a scale that was unthinkable just a few years ago. Why? Because they offer what the old system can no longer guarantee: speed, transparency, and resilience. Central banks know this too. Over 130 countries are actively exploring or piloting central bank digital currencies. These aren't fringe experiments. They're infrastructure tests for the next version of global money. And they all point in the same direction, toward a programmable, interoperable, and digitally native financial system. But here's where it gets even more interesting. This shift isn't just reactive, it's coordinated. Major financial institutions, regulatory bodies, and even think tanks like the World Economic Forum are all converging on one idea: the existing monetary system is obsolete, and what replaces it must be faster, more secure, and more controllable. This doesn't mean the dollar disappears overnight, but it does mean its role is being redefined. And if you're not paying attention to how that redefinition unfolds, you risk getting left behind in the single largest structural shift in financial history. Let's take a closer look at the mechanics. In the past, treasuries were the go-to collateral for overnight lending markets. They were liquid, stable, and universally accepted. But with recent volatility, even short-term treasury bonds are experiencing price swings that make them risky for institutional balance sheets. That's triggering a domino effect. Banks that rely on treasury holdings to meet regulatory requirements are finding themselves in a dangerous squeeze. If they sell, they lock in losses. If they hold, they face capital deficiencies. And as more banks are forced to sell, the pressure increases. It's a slow-motion unraveling of the core mechanism that props up the global financial system. Meanwhile, decentralized systems are doing the opposite. They're gaining liquidity, scalability, and institutional interest. When a blockchain network can settle a cross-border transaction in 3 seconds for pennies versus 3 days with massive fees using the legacy system, the writing is on the wall. The irony is that while the mainstream media focuses on minor crypto scandals, the real story, the real shift, is being ignored. This isn't about coins going up or down. It's about infrastructure. And infrastructure changes everything. If you've been wondering whether blockchain is a bubble or a breakthrough, consider this. JP Morgan has already built its own blockchain settlement system. Visa and MasterCard are piloting blockchain rails for interbank transactions. BlackRock is investing in tokenized assets. This isn't theory, it's execution. And this brings us to the moment of decision. The people who benefit most from structural transitions aren't the ones with the most knowledge, they're the ones with the most clarity. The clarity to see where the system is going before it gets there. The clarity to act when the opportunity is still misunderstood. The clarity to exit the legacy model before it collapses under its own weight. Right now you have that opportunity. Because while the majority of the world is still distracted by political headlines, social media noise, and outdated financial advice, a quiet revolution is rewriting the rules of money. And those who understand the shift will not only preserve their wealth, they will multiply it. So what can you do? Start by protecting your capital from system fragility. That doesn't mean abandoning traditional finance completely. It means diversifying into assets and platforms that can operate independently of centralized risk. Learn about tokenized assets, decentralized exchanges, and digital custody. Next, study the new rails. XRP, Stellar, Algorand, and others are not just coins. They are protocols, infrastructure layers, the new SWIFT networks. And they're already being used by the very institutions that claim crypto was a fad. Finally, don't wait for permission. This transformation won't be televised in full. By the time it's obvious to everyone, the early positioning will already be gone. If you want to be part of the new system, you must act while the door is still open. Because the next time the Treasury market seizes up, the system may not be able to patch itself. The reset won't be announced, it'll be triggered. And you'll either be prepared or you'll be watching from the sidelines as the future gets written without you. It's not about chasing meme coins or hype tokens anymore. It's about understanding that the next generation of financial dominance will be built on the systems that process value, not just store it. Imagine a future where every asset, from real estate to stocks to currencies, is tokenized and moves frictionlessly across interoperable blockchains. That's not a fantasy. That's a roadmap currently being drawn up in conference rooms across Singapore, Zurich, and Abu Dhabi. These cities aren't waiting for the West to approve new regulation. They're building and testing now. And they're moving fast. What most people don't realize is that wealth doesn't disappear in a collapse. It simply changes hands. The people who saw the dot-com boom early didn't just survive. They became titans. The ones who understood what happened after 2008 didn't just protect their capital, they built generational fortunes. And right now, we are at the tipping point of the next seismic transfer. Don't make the mistake of assuming this is just another market cycle. This is an infrastructure transition. It changes who has power. It changes what is considered money. It redefines access. And for those who move early, it creates leverage that can last for decades. If you're serious about building real wealth, you have to think structurally. Where is value going to flow next? What platforms will host the next era of finance? Who is laying the... If this message helped you see what's coming more clearly, subscribe now, because what's coming next won't be a cycle, it will be a transformation. This is also why traditional hedge funds, family offices, and sovereign wealth entities are starting to allocate meaningful capital to infrastructure-level digital assets.